In this lecture we will discuss process costing. Process costing is used when you have uniform goods and services. It is the opposite of job order costing, which is used when you have unique goods and services. With job order costing, every order that a firm had was different, so the costs are different. With process costing, all the products are the same. When all of a firm's goods are the same, then the cost of those goods should be the same as well. There is no need to keep track of the labor, materials and overhead that go into each good produced. The firm just uses the average cost to produce a unit as the cost for all of the units. Assume that your factory produces television sets. In a given period, the factory produces 300,000 television sets at a total cost of $6 million. The television sets are exactly the same model. Rather than keeping track of the cost to produce each set, the firm merely calculates the average cost by dividing $6 million by 300,000 sets. The firm treats the $20 average cost as the cost of each television set. As you can imagine, this is much simpler than job order costing and much less expensive to maintain. The firm calculates the average cost for each cost component. Please remember that these cost components are direct materials, direct labor and manufacturing overhead. If the costs components behave differently, then their average must be calculated separately. When the cost components move in the same manner, however, then the firm can combine them and treat them as if they were one cost component. For example, assume that a firm uses direct labor hours as the cost driver for applying both direct labor and manufacturing overhead. Since both cost components have the same cost driver, their total costs change with factory activity exactly the same way. In this case, it is common to combine them and treat them as if they were one cost component. When direct labor and manufacturing overhead are combined and treated as if they were one cost component, they are called conversion costs. It is very common for factories to combine direct labor and manufacturing overhead. Every month, a factory calculates the average cost of its cost components by dividing the cost of that component for that month by the number of units produced with that cost during that month. This isn't very difficult when the factory makes whole units. When the factory makes partial units during the month, it becomes a little more difficult. When partial units are involved, the firm must include the cost of the partial units in the numerator and include the partial units in the denominator. For example, if you have 4 units that are only 50% complete with respect to the cost component in question, you add 4 halves to the denominator. You combine the fractions. So, 4 halves become 2 units. A factory can divide the units that it works on into 3 groups. The first group is made up of the units left over from the previous month. We will call these units beginning inventory. The second group of units is made up of the units that are started this month and finished this month. We will call this group started and completed. The final group is made up of units that were started this month but not finished. We will call this group ending inventory. The production of the factory works like this. First, the factory takes up the beginning inventory and finishes those units. It then starts work on new units, which it also finishes. This is the started and completed units. Finally, it starts work on new units that it doesn't finish. This is the ending inventory. Whenever a problem talks about units that were started this month, it is discussing started and completed units as well as ending inventory. Whenever a problem talks about units that were finished this month, it is talking about started and completed units and beginning inventory. Remember that units started include ending inventory. Also remember that units finished include beginning inventory. Under the pressure of an exam, don't think start and begin are synonyms and therefore units started include beginning inventory. They don't. Also, don't think finish and end are synonyms and therefore units finished include ending inventory. They don't. Assume that you were told that 10,000 units were started, 6,000 units were finished and there were 2,000 units in beginning inventory. Now you need to figure out how many units are in beginning inventory, started and completed and ending inventory. Problems love to make you figure out how many units are in a specified group. You know that there are 2,000 units in beginning inventory because it was given. You also know that 6,000 units were finished. You also know that units finished include beginning inventory and started and completed. So, you know that 6,000 units were finished and 2,000 of those units were in beginning inventory. Thus, the remaining 4,000 units are in started and completed. In addition, you know that 10,000 units were started and those units are made up of the started and completed units as well as the ending inventory. So, you know of the 10,000 units that were started, 4,000 units were started and completed and the remaining 6,000 units were in ending inventory. We are now going to talk a little about the way costs behave. In order to do a process costing problem, you need to know the percentage of the units that were completed during the period being examined. If you are lucky, you will be given these percentages. For example, you could be told that a group of units are 50% complete with respect to direct materials. If you are given those percentages, that is great. Sometimes, however, the problems use code words and make you figure out the percentages. We will consider two code word examples. Assume that your firm makes baseball bats. In a month, your firm spent $20 on wood for the bats that it produced. Your firm produced 10 complete bats. It also worked on 10 more bats, but only completed 50% of those bats.
Your firm makes a bat by picking up a piece of wood and scraping the wood away until you have a baseball bat. As soon as you pick up a baseball bat, you have all of the wood cost that you are ever going to have. This is called an initial cost, because all of the wood costs are added initially as soon as you start work on the bat. When a problem talks about adding a cost at the start of the process, it is talking about an initial cost. How do you calculate the average cost per bat for wood? You know that you spent $20 on wood. So, this is your numerator in the average cost calculation. Now you need the denominator. The denominator is the number of units that you made with the $20. Clearly it includes 10 for the complete bats, but what do you put in the denominator for the half-complete bats? Ask yourself if there is any difference in wood cost for a complete bat and a half-complete bat. We said that they have the same wood cost. If a half-complete bat has the same wood cost as a complete bat, then you treat them the same as a complete bat. So, you put 10 in the denominator for the half-complete bats. That gives you a total of 20 bats for your denominator. When you divide $20 by 20 bats, you get an average wood cost of $1 per bat regardless of whether the bat is completed. This is true for all initial costs. You treat all of the units that were started the same way when calculating the denominator regardless of whether those units were completed.
What if your firm also finished work on 5 more bats left over from last month? How would your answer change? It wouldn't change the calculation. Your firm still spent $20 on wood for that month, and that cost was spent on 20 bats this month. The extra 5 bats that your firm was working on from last month already had all of the wood cost that it will need. That wood cost was added last month when the firm started working on those bats. The firm didn't have to spend another dime on wood cost in order to complete those bats. Remember, the calculation is the wood cost for the period you are measuring divided by the units on which the wood cost was spent. We are now going to talk about uniform costs. Problems usually describe uniform costs as being costs that are added evenly or uniformly throughout the process. Let's go back to our baseball bat example, and assume that the labor is added evenly throughout the process. In other words, if you are halfway done with the bat, then it has 50% of the labor cost that it will eventually have. In our example, assume that we spent $30 on labor to produce our 10 complete bats and 10 half-complete bats. Unlike an initial cost, there is less labor in a half-complete bat than a complete bat. Your denominator has to reflect that difference. Let X represent the labor cost in a complete bat, and let a half X represent the labor cost in a half-complete bat. So, the total labor cost of $30 is equal to the labor cost in 10 complete bats, which is 10 times X, plus the labor cost in 10 half-complete bats, which is 10 times a half X. 10 times a half X can be simplified into 5X. This gives us 10X plus 5X equals $30, and we can simplify the left-hand side of the equation so that it reads 15X is equal to $30. When you move the 15 to the right-hand side of the equation, you get X, which is the average labor cost, is equal to $30, which is your labor cost, divided by 15. This is how we calculate the average cost for a uniform cost. To get your average cost for a complete bat, we divide our labor cost of $30 by the number of bats produced by that labor. We put 10 in the denominator for the complete bats. We put 10 halves into the denominator for the 10 half-complete bats. We discount the denominator number for the half-complete bats because there is a difference in the labor cost contained in each of the bats. The half-complete bats have half of the labor cost that the complete bats have, and the denominator has to reflect this. The 10 half-complete bats have the same labor cost as 5 complete bats, so we simplify the 10 halves into 5 complete bats. This gives us 15 total bats in the denominator. When you do the calculation, you discover that X is equal to $2. Remember that X is the labor cost in one complete bat, which is $2, and the labor cost in a half-complete bat is half of that amount, which is $1. The total number of units in the denominator is called equivalent units. The reason why it is called equivalent units can be seen in the average labor cost calculation that we just did. The equivalent units in the labor cost calculation is 15 bats. The labor cost in 10 complete bats and 10 half-complete bats is the equivalent of the labor cost in 15 complete bats. The equivalent units for direct materials is 20 bats. The direct materials in 10 complete bats and 10 half-complete bats are equivalent to the direct materials in 20 complete bats. Initial costs and uniform costs are not the only ways that costs behave. You need to use the description of the cost behavior that appears in the problem. If the problem gives you the percentage that the units are complete for a given cost component, then use the percentage and don't worry about code words. For instance, our example could have just told you that the baseball bats in ending inventory, which are the half-complete bats, are 100% complete with respect to direct materials and 50% complete with respect to labor. Now we are going to do a process costing problem. There are two methods used in process costing. They are the FIFO method and the weighted average method. We will start with the FIFO method. Assume that our firm makes a product using two departments. Each department has its own work in process account. We are talking about the direct materials and conversion costs in the second department. In the second department, direct materials are applied at the start of the process, which makes them an initial cost. Conversion costs are applied evenly throughout the process, which makes them a uniform cost. There are 20,000 gallons in beginning inventory, which are 30% complete. Because direct materials are an initial cost, this means that the gallons are 100% complete with respect to direct materials. Because conversion costs are a uniform cost, this means that the gallons are 30% complete with respect to conversion costs. During the month, 180,000 gallons were started. At the end of the month, 30,000 gallons were still in the work in process account. They were only 40% complete. Because direct materials are an initial cost, this means that the gallons were 100% complete with respect to direct materials. Because conversion costs are a uniform cost, this means that the gallons are 40% complete with respect to conversion costs. This information gives you all the information that you need to know with respect to the costs incurred in the second department. The gallons also have costs that were spent on them in Department 1. We will talk about how to handle these costs later in this lecture. This slide gives the cost information for the gallons in the second department. The cost of the beginning inventory from last month is $42,360. This is the beginning balance of the work in process account. This month, $360,000 of direct materials were added to the work in process account. $211,200 of direct labor costs were also added, as were $316,800 of manufacturing overhead. The first thing that we have to do is figure out how many gallons are in each group of units. We were given that there are 20,000 gallons in beginning inventory and 30,000 gallons in ending inventory. We were also told that 180,000 gallons were started. So we need to figure out how many gallons are in started and completed. We know that the units started include the started and completed units and the ending inventory. So, we know that 180,000 gallons were started, and of those units 30,000 gallons were started and not finished. So, 150,000 gallons must have been started and completed. We now know how many gallons are in each group of units. We now start to construct a table that will give us all the information that we need to know for our firm to do its journal entries as well as a production report. We now want to add a column to our table. This column will give the percentage of the units that were completed this month with respect to each of our cost components. With the FIFO method, we want to divide the cost of each cost component for this month by the amount of work that was done with respect to that cost component during this month. In order to calculate the denominator number, we need to know the percentage of the group of units that were completed this month with respect to each cost component. The first percentage will be direct materials and the second percentage will be conversion costs. With respect to the beginning inventory, remember that direct materials are an initial cost, which means that all of the materials were added when the units were started. The beginning inventory was started last month, which means all of the materials that the units needed were added last month. Nothing more has to be added this month. So, none of the direct materials cost this month was spent on the beginning inventory. Thus, these units are not included in the calculation of the average direct materials cost that were spent on units this month. Therefore, we put a 0% for beginning inventory's direct materials percentage. With respect to conversion costs, remember that conversion costs are a uniform cost, which means that they are added evenly throughout the process. The gallons in beginning inventory are 30% complete when the month starts, which means that they are 30% complete with respect to conversion costs. What do we have to do to complete those gallons? The firm has to do the other 70%. So, we completed 70% of those units this month with respect to conversion costs. Therefore, we put 70% as the conversion cost percentage for the beginning inventory. With respect to started and completed, remember that these units were started this month and completed this month. So, they were 100% done this month. Thus, we completed 100% of these gallons this month with respect to both direct materials and conversion costs. Therefore, we put 100% as the percentage for both direct materials and conversion costs with respect to the started and completed gallons. This is always true. By definition, started and completed units are started and finished in the current month, and they are always 100% complete with respect to every cost component. With respect to the ending inventory, please remember that these units were started this month and that direct materials are an initial cost. When they were started, they were given all of the direct materials cost that they will need. So, they are 100% complete with respect to direct materials. Thus, we put 100% as the direct materials percentage. Please remember that these units are 40% complete and conversion costs are a uniform costs. Therefore, these units are 40% complete with respect to conversion costs, and we put 40% as the conversion cost percentage for the ending inventory. In order to calculate the average direct materials cost for this month, we have to divide this month's direct materials cost by the work done on the units during this month with respect to direct materials. This month's direct materials cost was given as $360,000, which is the numerator of the average cost calculation. We now have to figure out the work that was done on the units during this month with respect to direct materials. On our table, we will put the numerator number at the top of the table next to direct materials. Below that number we will calculate the denominator for the direct materials average cost calculation. This number is the equivalent units for direct materials. To get that number, all you need to do is multiply the number of units in the units column by the percentage of work done on those units with respect to direct materials from the percentage column. And I was added next to direct materials to remind you that direct materials is an initial cost. So, 20,000 units times 0% is 0 units, which is what we put down in the denominator section. This makes sense. The beginning inventory was started last month, and no new direct materials were added this month. So, none of the $360,000 that was spent on direct materials this month was spent on the beginning inventory gallons. We now multiply 150,000 units times 100% and put down 150,000 units. We did all of these units this month, and if you want to figure out the average amount that was spent on each unit with respect to direct materials, you would include 150,000 units in the denominator for the started and completed gallons. We now multiply 30,000 units times 100% and put down 30,000 units. Although the ending inventory units are only 40% complete, they were started this month and have all the direct materials cost that they will ever have. Moreover, the amount of direct materials contained in each ending inventory unit is exactly the same as the direct materials contained in each started and completed unit. We are now going to set up the calculation of the average conversion costs. Both direct labor and manufacturing overhead are uniform costs. Since they behave exactly the same, we can combine them and call them conversion costs. If you add together the $211,200 spent on direct labor to the $316,800 spent on manufacturing overhead, you get conversion costs of $528,000. We add $528,000 to the numerator of the average conversion cost calculation. The U that appears next to conversion costs tells us that conversion costs are a uniform cost. To get the denominator number, we multiply the units for each group by the conversion cost percentage. With respect to the beginning inventory, we multiply 20,000 gallons by 70% and put down 14,000 gallons. We did 7/10 of each beginning inventory unit this month. Each of the beginning inventory units has 7/10 of the conversion costs that are contained in the started and completed units. So, we only put 7/10 of each unit into the average cost calculation. We have 20,000 of these 7/10 units, which we can simplify into 14,000 units. In other words, the conversion costs in 20,000 7/10 units are equivalent to the conversion costs contained in 14,000 complete units. With respect to the started and completed units, they were started this month and finished this month. So, they were 100% done this month with respect to conversion costs. So, we put down the full 150,000 units for the denominator in the average conversion cost per unit calculation. With respect to the ending inventory, they are 40% done, which means they only have 4/10 of the conversion costs that are contained in a completed unit. So, we only put 4/10 into the denominator for each ending inventory unit. Since we have 30,000 4/10 units, we put 12,000 into the denominator. When you add up the denominator numbers for each cost component, you get 180,000 units for direct materials and 176,000 units for conversion costs. Remember that the denominator numbers are called equivalent units. We are now going to calculate the average cost for each cost component. For direct materials, we divide $360,000 by 180,000 equivalent units to get an average cost of $2 per equivalent unit. For conversion costs, we divide $528,000 by 176,000 equivalent units to get an average cost of $3 per equivalent unit. These average costs tell us that any unit that was completely made during this month cost $5 to produce. $2 for direct materials and $3 for conversion costs. Now we are going to calculate the cost of each group of units. First, the complete cost of the beginning inventory units includes the amount spent on the beginning inventory last month, which was $42,360. You add to that figure the amount spent on those units to complete them. We didn't spend anything on direct materials, but we did spend money on conversion costs to complete the remaining 70% of those units. Remember that the average cost that we calculated was the average cost per equivalent unit. Since the beginning inventory had 14,000 equivalent units this month, with respect to conversion costs, we multiply $3 per equivalent unit times 14,000 equivalent units to get the $42,000 that our factory spent this month to complete the beginning inventory. The total cost of the beginning inventory is therefore $84,360. With respect to the started and completed units, we have 150,000 units that were completely made this month. Any unit completely made this month cost $2 in direct materials and $3 in conversion costs, which gives you a total cost of $750,000 to make these units. We finished the beginning inventory and the started and completed units. If you add the cost of these two groups together, you get the cost of the gallons that we finished. We call this total transferred out because it is the cost of the units that were transferred out of the department. This cost is $834,360. With respect to the ending inventory, we spent $2 per equivalent unit times 30,000 equivalent units for direct materials, which gives us the $60,000 that we spent on the ending inventory for direct materials. We also spent $3 per equivalent unit times 12,000 equivalent units for conversion costs, which gives us the $36,000 that we spent on the ending inventory for conversion costs. This gives us a total cost of $96,000 that we spent on the ending inventory this month. This slide shows you where the numbers that we just calculated appear in the department's work in process T account. The beginning inventory had a cost from last month of $42,360. This is the beginning balance of the work in process account. This month we added the following to the work in process T account: $360,000 for direct materials, $211,200 for direct labor, and $316,800 for manufacturing overhead. We finished work on the beginning inventory, which cost $84,360, and the started and completed units, which cost $750,000. We add these amounts to the right-hand side of the work in process account because we finished work on these units and they are leaving the department. The only units left in work in process at the end of the month are the ending inventory units, which cost $96,000 to produce so far. This is the ending balance of the work in process account. We are now going to talk about the second process costing method that firms use. This method is called weighted average. With the weighted average method, we take the beginning inventory's cost from last month and add it to the costs from this month in our numerators. Because the numerators have the cost from this month and last month, the denominators have to include the work done this month and last month as well. To review, with the FIFO method, the numerator of the average cost calculation had the cost from this month and the denominator had the work done this month. With the weighted average method, the numerator of the average cost calculation has both the cost from this month and last month, and the denominator has the work done this month and last month as well. The weighted average method is the same as the FIFO method, except that we have to make 3 changes because the average cost calculations include 2 months' worth of data rather than 1 month. The first change is that we have to add last month's cost to the numerator. The second change is that we have to add last month's work to the denominator. Including the work done last month doesn't change anything with respect to the started and completed units and the ending inventory because they didn't exist last month. The only change that is made concerns the beginning inventory. Since we are looking at this month and last month, we now say that the beginning inventory was started last month and it was finished this month, so we know that 100% of it was done over those 2 months. This is the second change to what we did before. The second change is that the beginning inventory percentages are now always 100%. Now, they are treated exactly the same as the started and completed units. The third and final change is that you no longer add last month's cost to the beginning inventory. We are taking those costs away from beginning inventory and adding them to our cost pool. In return for giving up those costs, we now give beginning inventory a full share of those costs, which is why the beginning inventory percentages are now 100%. Let's redo our prior example using the weighted average method. In order to do this, you need to be given the breakdown of the $42,360 of beginning inventory costs from last month. You can't calculate this. It has to be given in the problem. So, assume that $35,000 was spent last month on direct materials for the beginning inventory. Also assume that $7,360 was spent last month on conversion costs for the beginning inventory. You now have to add these costs to the numerator. So, we add $35,000 to the $360,000 from this month to get a total of $395,000 for direct materials. We also add $7,360 to the $528,000 from this month to get a total of $535,360 for conversion costs. These are our new numerator numbers. Remember, this is the first change made when going from FIFO to weighted average. In this slide, you see the different numerators used by the two methods. With FIFO, you only use this month's costs, and with the weighted average method, you use 2 months' costs. In this slide, we see that the number of units in each group is the same with both methods. However, the percentages have changed. This is the second change made when going from FIFO to weighted average. The beginning inventory percentages are now always 100%. The percentages for the other groups have not changed. In this slide, you see the costs and equivalent units using each method. The costs have changed as we discussed previously, and because the beginning inventory percentages are now 100%, the beginning inventory's equivalent units are now both 20,000. This changes the total equivalent units and the average costs for each cost component. You can see that the average cost has dropped a little because the costs from last month were slightly less. In this slide, you now see how the different methods compute the cost of the groups of units. As you can see, with weighted average, the beginning inventory no longer receives the costs spent on it last month. This is the third change from FIFO. The costs were placed in the numerator and given to all of the groups. Remember that this is the first change from FIFO. In order to make up for losing last month's costs, the beginning inventory received 100% of the 2 months' costs. Remember that this is the second change from FIFO. With weighted average, a unit costs $1.98 per equivalent unit for direct materials and $2.94 per equivalent unit for conversion costs. So, the beginning inventory's total cost is calculated by multiplying its 20,000 units by $1.98 plus $2.94. With respect to the started and completed units, their cost is calculated by multiplying 150,000 units by $1.98 plus $2.94. With respect to the ending inventory, their cost is calculated by multiplying 30,000 equivalent units by $1.98 and adding that to 12,000 equivalent units multiplied by $2.94. We are now going to talk a little more about the situation where a firm separates its factory into multiple departments. Each department has its own work in process account. When the first department calculates the cost of the units that it produces and sends that cost to the second department, the firm credits the T account of the department which is finishing the units, and it debits the T account of the department which is starting the units. We now need to discuss how the second and later departments handle the cost that has been transferred from the earlier departments. That cost is the cost of the units being transferred, and it has to be reflected in the cost of those units. The second and later departments do this by treating those transferred costs as a new cost component in addition to direct labor and conversion costs. We call that cost component transferred in. Transferred in will get its own column in our table. Remember that transferred in is the cost from the earlier departments, and all of the units being transferred have been completed by the earlier departments. They therefore get a full share of the earlier department cost as soon as they enter the next department. For example, as soon as units are transferred to Department 2, they have all of the Department 1 costs that they are ever going to have. Transferred in is therefore always treated like an initial cost. The problem doesn't have to tell you this. It is always the case. Units get 100% of the transferred in costs as soon as they are started in the second and later departments. By the way, units are started in the second and later departments as soon as they are transferred. There is no situation where goods have been transferred but not started. The transferred in costs for a month belong to the units that were transferred to and started in the department for that month. The current month's transferred in costs have nothing to do with the beginning inventory. The beginning inventory was transferred in and started last month, and it got 100% of its earlier department costs when it was transferred in and started last month. Let's continue with the earlier example. Remember that we are the second department, and there was an earlier department. We only discussed the second department's costs and we postponed the discussion of the costs of the first department. We are now going to talk about how Department 2 handles those costs. Assume that the 180,000 units started in Department 2 brought with them costs from Department 1 of $1,800,000. Also assume that the costs from last month for the beginning inventory was not just the $42,360 that we discussed earlier, but also included $200,000 from Department 1, bringing the total costs from last month to $242,360. Using the FIFO method, we would add a new column to the table that we did previously. The column would be labeled transferred in. We would put the letter I next to it in order to note that it is an initial cost. Note that a third percentage has been added to the percentage column, which reflects the percentages of an initial cost. The beginning inventory gets a 0% because it received all of the transferred in cost that it is ever going to receive last month when those gallons were started. That is the $200,000 of transferred in costs that are now in last month's costs. Also remember that the $1,800,000 in transferred in has nothing to do with the beginning inventory. It is the Department 1 costs of the units that were started in Department 2 this month. The started and completed units as well as the ending inventory each get a 100% in these third percentages because they received 100% of these Department 1 costs as soon as they arrived in Department 2. The equivalent units in the transferred in column reflect these percentages. Beginning inventory has 20,000 units times 0%, which is 0 equivalent units. Started and completed has 150,000 units times 100%, which is 150,000 equivalent units. Ending inventory has 30,000 units times 100%, which is 30,000 equivalent units. The total equivalent units for transferred in is 180,000, and when you divide the $1,800,000 transferred in costs by 180,000 units, you get an average cost of $10 per equivalent unit for transferred in. We will now calculate the cost of each group of units using this new information. Please remember that beginning inventory's cost from last month is given. You don't calculate anything. That cost is $242,360 when the Department 1 costs are included. With FIFO, you add this month's cost to complete the beginning inventory to the cost from last month. This month's costs for beginning inventory is 0 equivalent units times $2 for direct materials, plus 14,000 equivalent units times $3 for conversion costs, plus 0 equivalent units times $10 for transferred in. When the $42,000 from this month is added to the $242,360 from last month, you get a total cost for the beginning inventory of $284,360. The cost to complete one unit this month is $2 for direct materials, $3 for conversion costs and $10 for transferred in, which gives you a total cost of $15 per unit. The 150,000 started and completed units therefore cost $2,250,000. The ending inventory's cost is calculated by adding together, $2 times 30,000 equivalent units for direct materials, plus $3 times 12,000 equivalent units for conversion costs, plus $10 times 30,000 equivalent units for transferred in. This gives you a total cost of $396,000 for the ending inventory. We will now redo this example using the weighted average method. Remember that the first change from FIFO is to add last month's costs to the numerator. So, for transferred in we add beginning inventory's $200,000 transferred in cost from last month to the $1,800,000 for this month to get a new numerator of $2 million. Remember that the second change is to make all of the beginning inventory's percentages 100%, which makes the beginning inventory's equivalent units for transferred in now 20,000, which raises the total equivalent units for transferred in up to 200,000. You now divide your new numerator by your new denominator, and you get an average transferred cost of $10 per equivalent unit. You now can calculate the cost to produce each group of units. We have just calculated that one unit that was produced over last month and this month costs $1.98 for direct materials, $2.94 for conversion costs and $10 for transferred in costs, bringing the total cost for one of those units to $14.92. The 20,000 units in beginning inventory therefore cost $298,400. The 150,000 units in started and completed therefore cost $2,238,000. The 170,000 units completed therefore cost $2,536,400. The cost of the ending inventory is calculated by adding $1.98 times 30,000 equivalent units plus $2.94 times 14,000 equivalent units plus $10 times 30,000 equivalent units, giving you a total cost of $394,680. The end.